performance. The Hang Seng, though, is a marginal underperformer.
Nifty, from where we left off on Friday, faces immediate resistance at this 50 and 61.8% retracement of the previous falls.
In terms of their September sales, it was largely in line with what the street was working with.
I hope to be able to build a very, very credible liability franchise.
24,820 is where the Nifty is at.
I think probably in the near term, positivity can continue.
I think there is a very, very positive sentiment out there.
The business now is in a place where the business is generating healthy operating cash flow.
We are building close to about 425 to 450 crores of corpus. That will go straight as working capital requirements.
40 points lower on the Nifty. Of course, it has come up from the highs as well.
This cut in commission, which is off about 18%, has come both on first-year premium as well as renewal of policies.
We understand that PepsiCo as well as UPL are in talks.
Next week, we will have 3 IPOs worth 30,000 crores.
Flat Nifty, but above the 24,800 mark.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema. With me are Surbhi and Mangalam. Hi guys, so far a bit of a mixed day. The Nifty, after opening below 24,800, has managed to climb above it and hover around those levels, but mid-caps, small caps showing some more resilience.
Yep, it's actually been a good day irrespective of, what the frontline index would have you believe. And the reason for that is, one, we came back after a holiday and we're going into a holiday once again. So to that extent, not much was expected. But if you look at the broader markets, and what led the markets higher on Wednesday was the Nifty Bank, which continues to do well in today's session as well, holding above that 55,500 mark, virtually at the higher end of trade for the mid-cap end of things as well. We have nearly 80% more stocks in the green than the number of stocks which are in the red. So 1,800 stocks in the green, about 1,000 stocks in the red. The only stocks which are not doing too well, we have the IT pack. That obviously will be in focus next week when the results come by. Reema will tell us a little more about that. But some of these consumption names, they're doing extremely well. So pull up something like an urban company that spiked a recent listing. We've seen some traction come by on a lot of these two-wheeler sales numbers that have happened. So, Hero MotoCorp has actually surged higher. And we are also seeing traction in names like United Spirits, Page Industries, and a lot of these PVR Inoxes kind of the world as well, because it's that time of the year, second half, where nearly 60-65% of the consumption of the year happens. And the street's feeling good about that pocket at least.
Yeah, so this week was important because on Wednesday, we snapped that long stretch of a losing streak, 8 days. And today, we've managed to hold on to levels and build when it comes to the mid and the small caps. And plus, we got the RBI, the policy tailwind midweek. But next week, there are 2 big triggers. One is going to be the earnings season. It starts with TCS on Thursday, that's 9th of October. And secondly, the 3 big IPOs, 2 of them actually. You've got a Tata Cap, which is looking to raise about 15,000 crore rupees. LG, that's about 11 to 12,000 crore rupees. And then you've got WeWork, smaller, and offer for sale of 3,000. But on the whole, 30,000 crore is going to be the IPO pipeline for just next week. So it's going to test the market's appetite and its liquidity. So these will be the 2 important cues for next week. But let's talk about Friday, 1 hour to go to wrap up the day and the week. And Surbhi's also here with us. Hi, Surbhi.
Yeah, absolutely. And, it's all about individual stocks, right? I think that the market's kind of made its peace with the fact that stop looking at the index. Let's look at individual stocks and see where money can be made. And today, so many examples. There's some defense names that are flying around. And then these are smaller defense names like an Astra Micro. There's data patterns up 7-8% as well. So many examples coming out there. MRPL, for instance, on my screen is suddenly surging 6-7% higher. So I think for the time being, traders have moved on trying to wait for the giants to move. It's about individual stocks where you can get a good trade, make some money, and that's what's happening. But I think we can get to Mitesh now.
Okay, before that, let's quickly get to what we have for you on our show today. So we'll get with the markets first. So Mitesh will join us in just a bit. But on the show today, it's been a choppy trade. The Nifty has persistently stayed above the 24,800 mark. The broader market is the outlier. Metals, PSU banks clocking in gains. Autos, though, are on the back foot. We've got a couple of counters in focus today. So V-Mart has skyrocketed following a robust second quarter update. Similar story for the likes of V2 Retail, Sai Silk. A detailed fine print on the numbers coming up. Defense stocks continue to fire away, and Goldman Sachs turns bullish on India's aero and defense sector. What's the rationale? And we'll also understand from sources the life insurers are all set to cut commissions on the first premiums and renewals. Not just that, commissions to distributors may also be cut by 18%. And that is a big CNBC TV 18 exclusive.
Okay, now let's get to the technical trading ideas. And we have Nagraj Shetty with us this Friday afternoon with some thoughts and ideas. Nagraj, hi. Good to have you in. So the index is not doing anything. It's all about stocks. But anyway, even on the Nifty and the Bank Nifty, give us your advice. The Bank Nifty was showing such promise on Wednesday. Today, once again, looking a little lackluster.
Hi, good afternoon, Surbi. Yes, market rightly said showed some strength at the lower levels. I think after eight sessions of decline at 24,600 level, market seems to have formed a short-term bottom reversal. Currently holding around somewhere around 24,850, 860 levels. I'm not expecting a bigger worry to that around that levels, and we could see some upside breakouts from here onwards. I think 25,200 is going to be the next target for the Nifty, at least in the next by next week probably. And the Bank Nifty as well. Bank Nifty was underperforming previously, and recently showed some promising up moves from the lower levels, showing higher tops and bottoms, looking positive. I think currently trading around 555, 520. I think 56,500. 57,000 is going to be the next target for the banking sector in the next at least 1 week.
Got that. In fact, the PSU banks in particular are doing exceedingly well. For the day, up 0.8%. And for the week, it's a gain of 4.1%. Nagraj, what about stocks? What do you have?
I have two stocks from alongside. First one is Nelco. Chartically, Nelco has been in a consolidation phase, larger consolidation phase, recently attempting to move above the 200-day EMA hurdle, currently placed at the higher levels, now trading around 905 levels. One can look to buy at this point of time. 950 is going to be the immediate target. One can place a stop loss of 870. Second one is MMTC from a metal front. MMTC, after a decline, has bounced back sharply in today's session, looking positive on the charts, currently trading around 69.55. The upside target would be around 75 and can place a stop loss at 66 at least for 1 to 2 weeks.
Thank you very much for that. Let's get to the... let's sort of begin the earnings season then, right, with the retail stocks. And we've got a few quarterly updates. How did they look?
Yeah, I often say that before the results season, it's the quarterly update season, and that's exactly what is currently underway. We have numbers coming in from V-Mart Retail, V2 Retail, as well as Silk. And the beauty about India, Rima, is that, all these companies report their numbers on a calendar quarter basis. And all the festivals that are there, they are obviously on the religious calendars that each of the festivals follow. So as a result of which, there is a lot of shift that takes place. The first quarter for all these retail companies was weak because Eid last year was in the first quarter and Eid this year was in the fourth quarter. Whereas now what has happened is Puja last year was in the third quarter, Puja this year was in the second quarter. So all of these companies are benefiting from that. So look at V-Mart Retail, good second quarter update coming in, 22% sales growth at 807 crores, same-store sales growth at 11% as well. So that's a positive. Remember, when typically same-store sales grows in double digits, that's a big positive, largely because that implies operating leverage and margin expansion as well. And this compares with the 1% number that they had reported in the first quarter. They've opened 25 new stores, total stores this year so far at almost 40. The management has said that this festive season they would see 20% plus growth, and we've seen signs of that in the second quarter itself. V2 Retail too, 86% revenue growth. Remember, a large part of their revenue actually does come from the eastern part of the country, which does celebrate Puja a lot more with with a lot more fervor. So they see a bigger gain out here, and their same-store sales growth is up 20.3%, 23.4% rather. If you normalize it, adjusted for Durga Puja, it's still 10%, so not particularly bad. In fact, they had joined us just last week. They said that they're targeting 50% revenue growth this year with 8 to 10% SSSG. And finally, we have Silk. That's growing well as well, 28% revenue growth. They opened about 5 stores this quarter. H1 itself has seen a good performance, 34% revenue growth coming in for them. And they too are planning to expand their store presence with 10 new openings in FY26. So second quarter, positively impacted by Durga Puja shifting, as the first quarter was negatively impacted by Eid shifting. Now the question is, how do they grow in the second half of this year with Diwali and Dussehra, both of them being in the same month? And add the, to add to all of this, they have the benefit of a lower GST rate as well. So the street is fairly bullish on that. So these three are the companies which have only reported their quarterly updates. Look at something like a CRM Silk Mills. That stock is up 6% as well. And we are seeing some traction in a lot of these consumption names just as we move move towards the festive season. So these are the stocks which have reported their numbers. Look at Siaram Silk, that is up around 6.5% as well.
You know, the Sai Silk, I was just checking, there's a marked improvement in the growth rates in H1.
Yeah.
Q2, 28%. Q1, you said, was over 40%. Q4, that's last year, 10.9%. The quarter before, 17%. The quarter prior, 6%. Before that, Q1 of last year was minus 12%. Before that, 11%. So, I mean, just still H1, it looked like the growth was fairly muted and tepid, and now there has been a material improvement.
Absolutely. It's also the move from unorganized to organized happening, and they recently did an IPO, if I remember correctly, about 2 years, 2.5 years ago. So these funds and all of that really bolsters the growth in all of these companies. So this stock is well up and above in today's trading session as well. In fact, what we'll do is we'll pose this question to Dharmesh Kant, who's the head of research at Chola Securities, joining in. Dharmesh, it's that time of the year when talk moves away from capex, which we speak about usually during the budget, to consumption as we move towards Diwali and Christmas and all the festivities and towards the end of the year as well. Do you think portfolios shift like that as well?
Yeah, good afternoon. See, I don't think you should be running too much into this kind of numbers, because end of the day, it's 15 to 20 or 22% kind of growth numbers with, single teens or, near teens kind of a margin update. So my sense is, and look at the valuation multiples where they are trading at. V-Mart retail is more than 130, 129 on a trailing basis. P multiple it is trading. So, as long as the going is good, price hikes, the stock price is rising, it looks good. But end of the day, the reality, draws down, and then you have a valuation setting, the resetting taking place. And the case in example, classic case is DMart. In 2021, it's down around 20% from there, and still the company is growing, and the trend for that matter, it has not been able to pick up. Nothing wrong with the company; they are still growing, they are still clocking 10-15% kind of a growth, but valuation is catching up. Sooner or later, it will happen with V2 Retail, V-Mart, and all the likes for that matter. So, the advice is not to get into a fresh buy. You still play with the normal, thematic play of infrastructure, defense, railway infra, and banks, now a new one in the basket. And these are the sectors which can give you a consistent compounder with valuation comfort. Unlike others where the earnings may still grow at 10-15%, but valuation comfort may not be there.
Okay. All right. Dharmesh, wanted your view on metals. But by the way, first we need to take stock of the markets. Just take a look at the Nifty. What a massive recovery we have seen from the day's low. Super move is what we're seeing. And, there's a bit of a spike in the last few minutes because you have the Nifty Bank. That's, again moved to the high point of the day. So good up move is what we're seeing on that one. Power Grid is one stock that actually spiked to the high point of the day. Bajaj Auto as well. Mr. Sharma earlier today said that the sales are rocking, in his words. And they are rocking even more than the remainder of the industry. So that one as well has moved up. And Titan, another stock that's moved up. So good to see. Markets at the day's high. The party was on Wednesday. There's a bit of an after party that's playing out in today's trading session. But let's talk about the sector that's twinkling away. That's the metal index. It's buzzing around in trade, and let's highlight a few factors. Well, there are elevated rate cut hopes coming in from the Fed. There's a bit of a shutdown that's playing out in the US economy. That could bode well for in terms of the probability for going ahead and seeing another rate cut. Next up, the dollar index. If there's going to be a rate cut, the dollar index as it is soft and will continue to remain subdued. A weaker dollar index is good for base metal prices. Point number 3, coming hope then. The RBI, their stance is pro-growth. So that's why, in fact, things are looking up, and obviously you'll see high beta doing better. And as we alerted you just, I think, a week or so ago, that there is optimism that there is good reason that we could see a decent steel price increase because, imports that are coming in either from China or even from the FTA countries like Japan as well as South Korea, well, the domestic prices are at a sharp discount. Remember, we have got protection that's out here as well in terms of a safeguard duty of around 12%. And we're coming out of the monsoon season. So put everything together, we should be bracing for a steel price increase going by the fundamentals. That explains why the metal index is doing well today. And it's been doing well over the last few trading sessions as well. And just a word on aluminium, I was just checking to see whether or not there's a big move in terms of aluminium prices. Not really. So it appears that positive global sentiment actually is playing out on the metal stocks. Dharmesh Kant is still with us. Dharmesh, what is your view? What's the commodity, the metal that you like the most, the metal stock?
Yeah, good afternoon, Nigel. I mean, if you look at commodity prices, particularly the metals for the international market, they have done nothing year till date. Most of them are down, be it, aluminum is 2-3% up year till date. Steel prices are down year till date. Only copper has done good. It's around 16-17% up. But as far as the Indian prices are concerned, as the points you have highlighted, that has helped the Indian steel prices being stable, and safeguard duties have prevented the aggressive dumping into India, and that is helping the cause. Most of the metal companies are already at all-time highs, be it Tata Steel or JSW Steel, Hindalco. They are trading at near highs, all-time highs. So, but still, I think there is a scope for them to do much better from here. And as far as valuation comfort is concerned, I think Hindalco looks pretty good because it is a sizable share of copper mining and copper smelting taking place. At the same time, Hindustan Zinc looks particularly, high. I mean, very cheaply valued to me at 20 times PE multiple with 60-70 kind of an ROE, 6% of dividend yield, and it has a lion's share of lead and silver. Production into India. Silver prices are going up, and it's likely to do well because 50% of its commercial use internationally or nationally is gaining traction because of all this EV vehicles, solar, wind energy, and everything. The batteries, the battery storage system, data centers, every equipments consume silver in a sizable quantity. So this traction is likely to continue. So our top pick in the entire metal space is Hindustan Zinc, Hindalco, and Hind Copper. To an extent, you can continue that. Those who are holding steel companies, the ferrous space, continue to hold them. Tata Steel and JSW looks far better, though now I think the valuation is getting stretched for them.
Okay, so yeah, valuations may be a bit of a challenge, but ferrous still something that Dharmesh is looking at. Dharmesh, stay on. We want to discuss some of these defense names with you, which are fairly active in today's trading action. Before that, let's actually bring in Ria. Goldman Sachs today came out with a note on defense and aerospace companies. Let's see what Goldman's thesis is and the specific names that they like. Quite a few of the mid-caps doing quite well in this space, Ria. Tell us more.
Well, yes, Surbi, Goldman Sachs came out with a note today. They've initiated coverage on 8 stocks and they've identified 3 key themes. The first one is the increase in domestic defense TAM by more than 6-fold versus FY25 to over 10 lakh crores over the next 20 years. The second one is the scope for indigenization at the bottom of the tech pyramid. Now, this includes components and process materials where local players have been underrepresented up until now. And the third theme is higher defense exports going ahead. The government has targeted around 50,000 crores in exports by FY29 versus around 23,600 crores that we saw in FY25. Now, apart from this, they've also highlighted 3 key trends which make them relatively more positive on private defense players versus PSUs where the concentration has been up until now. The first one is the shifting spending landscape. Now, looking at the recently released TPCR as well as the focus on new technologies such as AI-enabled systems, electronic warfare as well as UAVs, they believe that private defense players will benefit more from these as they are better exposed. The second trend is superior EPS growth over the next 3 financial years. Private sector players are expected to show around a 32% CAGR here versus around 13% for PSUs. And the third thing they've highlighted is that private defense players will benefit greatly from the rise in global defense spending when compared to PSUs. Now, in terms of the stock picks, they have a buy call on solar industries as well as PTC industries with the highest upside of around 36% and 58% respectively for each of these. They also have a buy call on Astra Micro, Data Patterns, Azad Engineering as well as Bharat Electronics. On the flip side, they have a sell call on Bharat Dynamics on the back of contracting margins and unattractive valuations. And on HAL, they have a neutral call. In terms of the stock moves today, most of these stocks are performing quite well. The biggest gainers earlier in the session were PTC and solar industries, which have cooled off a bit now, but right now also they're still holding on to strong gains. The biggest gainers right now are Astra Micro, Data Patterns as well as Azad Engineering, up at anywhere between 8 to 12%, and the index is also up around 2%.
All right, Ria, thanks a lot for that. So those are a bunch of these stocks which are doing extremely well. The defense pack, meanwhile, we also have the first jewelry sector update coming in for the second quarter, where Dussehra and Navratri have done extremely well for PN Gadgil. Their Navratri contribution has been over 400 crores, and year to year, basically festive season to festive season, the growth has been in upwards of 80%. I'm sure a large part of that, in fact, most of it would be on account of the higher gold prices. So to that extent, volume growth would be extremely crucial to track as well. But be that as it may, either volume brings in or, value brings in, there is revenue growth. For a lot of these second-tier jewelry companies as well, what's important is that a large part of their gold, which was, as compared to, say, Titan or the others, they have some of it exposed, which is unhedged as well. So every time there is a gold price increase, they stand to benefit from that in terms of inventory gains too. But because by and large, because of the gold price rise, we've seen a big surge in sales value for these companies. We've seen traction for names like Titan and Kalyan Jewelers as well, both of them higher, and that is reflecting in the market. The market's now closer to 24,900 on the Nifty, and the last leg of up move has come in largely on account of these consumer names. So HUL, for instance, is recovered and it's come to the high point of today's trading session. Asian Paints, we're losing sight of the fact that, crude is still at a 4-month low. This is festive season for all these paint companies as well. So any sort of margin improvement, you have Asian Paints and Berger, all of them spiking. So markets rocking right now.
So I just wanted to add that in the morning we had numbers from PC Jeweler.
Yep.
Same story, around 65% of a revenue increase, for the quarter. And I guess for them also, it's gold price appreciation that would have played a big part. And PC is up about 6% as we speak. So lots of sparkle there on jewelry stocks. Dharmesh, let's get your quick views on both before we let you go. These smaller jewelers, the likes of PN Gadgil and PC, whether you think they're worth a look, worth a buy, and the smaller private sector defense stocks as well that Ria was just talking about, because they're the ones that are really reacting. And Goldman's thesis is that they'll be bigger beneficiaries. While we always talk about HAL and the BELs of the world, they're looking at names like Data Patterns and Astra. So your thoughts on the small jewelers and the small defense players?
Yeah, so first of the small jewelers, I think the numbers have been excellent. And Maglam, rightly pointed out, most of it has to do with the inventory gains and the sequential rise in gold prices. So that again plays out, they are buying at a lower cost, and eventually when they are selling the made jewelry, it's getting at a higher cost. At the same time, there has been, the carat which is being used now is a lower carat because the value remains the same from the buyer's perspective. And they are making charges differential, the arbitrage is there, and I think the operating margins when they report would be equally healthy. So the numbers will be good this time around, and I think this ride can continue till Diwali, so no point exiting or selling it. And we are liking PL Guidegil from the smaller jeweler space, so we have been liking that company, and that remains a buy and hold kind of a candidate. As far as small defense companies are concerned, I mean, look, there's a structural decadal kind of a story unfolding in the entire defense space. But all the smaller defense companies, the majority of them does not even report 1,000 crore kind of a revenue on the top line. It's still been driven by 23,000 crores by BEL and 30,000 crores by HL, and to an extent 3,000-4,000 crores from BDL. So sensing the kind of order inflows which are coming in, 64% Make in India kind of a new deal wins which these defense companies are doing, the government of India is imposing that. I still think it's better to be with large caps like HN and BL, and small caps anyways the valuations are rocket high. So even if they double their revenue and double their profitability, still valuation justification will be a challenge for them. So our house view is we are sticking with HAL and BLs of the world in the defense space.
We should pull up some of the other jewelry companies to see if there is a rub-off impact. So Kalyan, let's get that up for you on your screen. I think that's also up 4-5%. Senco Gold, a Titan should come up. And generally, there's a lot of excitement seen in these hotel-related stocks. You've got a Lemon Tree, which is up and about. You've got EIH with a 10% kind of an up move too. Dharmesh, a quick word on True Alt, the new listing of the day. It's a very strong subscription, 72 times. It's an ethanol manufacturer. Their market share is about 3.5-4%, and they use biofuels. Have you studied the company?
Jarima, we are not, bullish on the ethanol manufacturers. So this was a story which played out 3 years back. And now I think, they are on the other side of the curve. So we have not covered this company in the IPO note as well. And as a house view, we are, staying away from all ethanol manufacturing kind of our companies.
All right, we take that point. Thanks a lot for joining in, Dharmesh. With that, we'll take a short break. On the other side, we have Jitendra Sriram from Baroda BNP Paribas Mutual Fund on the other side to discuss markets, his views, and the sectors and categories he likes. Welcome back. We were speaking about how the IT stocks were weak earlier. Now they've started to pick up as well ahead of earnings next week. So Infosys is at the high point of trade. We're seeing some traction build on a couple of these other names as well. HCL Tech, for instance, has recovered from the low. So the IT index is now back into the green, and given its weight on the index, second only to the banking pack, it's only understandable that its contribution has reflected on the Nifty as well, which is sitting now with a gain of 50 points as against flat when we had started the show. But top movers in the market, Hormaz joins in to tell us a lot more. Hormaz, yes, the Nifty did move 50 points, but beneath the surface, a bunch of stocks which are moving and shaking around.
Moving and shaking, and how? And on very, very strong volumes as well. You know, start off with some of these smaller defense names on which Goldman Sachs came out with a note earlier in the day. Astra Micro, Data Patterns, Azad Engineering, all part of their coverage. And take a look at the volumes here. 22 lakh for Astra Micro, 14 lakhs each for Data Patterns and Azad Engineering, and the 20-day average almost 4 to 5x higher than their 20-day average being today's volumes. The other one on the list today has been Avantel, and today's gain is the biggest since February of last year. The stock has cooled off from the highs of the day but was among the top gainers today. Volumes are the highest since June. We have had close to 2.5 crore shares that have changed hands today in comparison to a 20-day average of just 50 lakh shares. And the stock has done well so far, 41% in 2025 and positive returns every year since 2018. A couple of big movers on the business updates that were reported earlier. And Sai Silks Kalamandir, the biggest single day gain since listing. The volumes are the highest since listing as well. 3.5 crore shares have traded today. The 20-day average is less than 5 lakh. And V-Mart Retail as well. The double-digit advance here, close to 90 lakh shares have traded, and the 20-day average has barely managed to cross 1 lakh. And Sai Silks, though, still 16% higher, but below its IPO price. And lastly, Sandur Manganese is the biggest single-day gain for the stock since February. Today's volumes are the highest on record for the stock. More than 3 crore shares have traded today. The 20-day average close to around 9.5 lakh shares. The stock has now begun trading adjusted for its bonus issue, and now is up 43% so far in 2025. Was a bit of an underperformer last year, but has done very well so far in this year.
Okay, all right, got that. Hormaz, thanks very much. Always plenty of movers on your list. Well, with that, let's welcome in our next guest on the show. Jitendra Sriram, Senior Fund Manager at Baroda BNP Paribas Mutual Fund, is with us. Jitendra, thanks very much for joining in. Season's greetings to you. Hope you had a great Navratri and a good Dussehra break as well. Now, the market itself has been on a break, and that's continued for a while, right? First things first, I want to talk earnings and whether you are in the camp that believes that there is going to be a meaningful pickup in the second half of the year. So are you expecting, therefore, the market to break out of its, comatose, logjam state, at least at the index level?
Yeah, season's greetings to you and your viewers as well. Firstly, I would say what we are sensing right now is that we are seeing earnings in more a stabilization phase, because if I look at the last 3 months data for Nifty, the NSE 200, for example, what I can sense is that earnings is now plateauing. Now you're not seeing any more cuts. So probably it's a little too early to say that in 2Q itself, you might see the perk up starting to come through. You might more see a stabilization of the earnings. But yes, these GST catalysts and monetary policy catalysts, which have been unleashed into the economy, hopefully with the third quarter and fourth quarter, you should start seeing some perk up in earnings there.
All right. Let's see whether, that reflects on all parts of the market right now or not. L&T, for instance, that's the stock which has moved higher. It's at the high point of trade. This morning, the company did tell the exchanges that they've won, major orders for both their buildings and factories business, which include construction for some 6 towers and a lot of civic work for a lot of these, other companies as well that they've got. Between 5,000 to 10,000 crore is how they classify major orders as. So that's doing well for them. A lot on the street were hoping for the consumption, capex to consumption shift happen. But do you think there is still some funk left in a lot of these old age capex stocks as well?
Yes, I mean, there are certain pockets which are actually getting a lot of traction from markets in the Middle East. So one could be, it may not be an India-specific sense, and you could see, Middle East, the MENA markets actually account for something like 15-20% of sales. Coming to India also, there are certain pockets which continue to be exceedingly strong. Like you look at the backlogs of some of the defense names, or you look at the backlogs of some of the power equipment guys, I think those names are running into multi-year backlogs. So to that extent, I don't think, there is any kind of worry that even if there is a small shift from capex to consumption and so on, you will see a meaningful alteration in the growth trajectory of these companies. I think the problems are more internal in some of these, that they need to just execute full hog.
Okay. Jitendra, we were just, looking at some of the updates that have been coming in on the consumer space as well. The jewelers, for instance, I mean, some of the preliminary numbers are looking very good. But you had Lever, which was far more cautious in its outlook for the second quarter. So now, when we talk about the benefits of the GST cuts, which part of consumer are you looking to play it through?
Well, to be fair, I mean, I would say that it's not that staples really sees a meaningful perk up because there is some taxation. That's not that I'll start consuming biscuits more or something else more. Obviously, there is a small element of volume tick up because there is a grammage issue. For example, a 10 rupee price point, if I was getting, say, 6 biscuits and today I get 8 biscuits, once I open the packet, I'm going to consume it all. So to that extent, that is something which will play out on the volumes. But it is not that, demand fundamentally shifts there. Whereas I think where it could really play out quite meaningfully is the consumer discretionary space, the areas where you actually have big ticket items like, white goods, you have consumer durables, and then the vehicles, automotive sector. These are the areas which will actually see a meaningful, and also you have to put it in the context that RBI doing what it is doing in terms of paving the path for a softer monetary trajectory. I think the combination will play out very well in these two areas, consumer durables and the white goods segment.
Right, Jitendra, so many primary market options as well. So many IPOs that happened last week and last week, along with a lot of listings that took place as well. Is there anything that caught your fancy among the ones that are, say, maybe due to open next week and the ones that have opened this week, along with the ones that have recently listed? Is there anything particular that you like?
We have participated in some of the financial segment papers that have come in of late because there is obviously certain growth trajectory that we are seeing there, which would be fairly okay. I think the white goods space is also something that is fairly interesting because it's a segment that is growing quite briskly. So that should do well over a period of time. So long as that tipping point of valuations and growth makes sense, we would be happy to look at those areas.
So when you said white good, you mean LG Electronics that opens next week?
Yes, that is also definitely is a high growth name to that extent.
What about Urban Company? Amongst all the IPOs which recently listed, many have been subdued, but this one stands tall.
Sorry, which one was it?
Urban Company.
Urban Company. Sorry, we haven't really looked at that so much, so that's I don't have any opinion on it.
What about IT? The Nifty IT index is down 20% year to date, while the Nifty, the broader index, is up 5%. Going into the earnings season, what is the view now? What will be the investor reaction? What if you get inline numbers? Is it a reason to sell, or take us through the narrative and the view on the index?
Well, see, the news flow has been a little bit damp in that segment, especially post the H-1B visa. But see, these are not things that will impact instantly. And one other area I would say that one needs to look at is also the Accenture commentary that came out a week or 10 days back. And that did not highlight too much of a risk. So earnings-wise, I don't see that you will see an immediate hiccup in terms of any of these names. I think markets' expectations are also quite low. In a sense, most people are expecting that -1% to +2% kind of sequential growth. And I think these companies should be able to deliver on those. Also, do remember that the way the rupee has behaved in the last month and a half, you should see some tailwind of margin expansion coming from there as well. So I don't think it's an earnings related issue, but what you would need to look at from a slightly longer term perspective, see, Visa will come back to hurt at some point of time because these will take 2-3 years to lapse, get renewed, additional fees get kick in then. Also, then you have the issue that at some point of time, the customer will also start evaluating whether it's cheaper to set up a GCC in India or to look at having H1B folks out there and all that. So there could be a little bit of a shift in terms of how the business is managed. So we'll need to go through that. But I don't think you will see too much of an immediate earnings problem. What might more matter is the kind of traction on orders and the visibility and the commentary that these companies give out now. And at least going by what Accenture gave out, it doesn't seem to be that there is too much of a headwind at this point of time, that at least looking at a small perk up as such.
Take that point. Thank you so much, Jitendra, for joining in and giving us your views on a whole host of stocks, sectors, and some of the ones that may hit the streets soon as well when it comes to primary markets. But the secondary markets, nothing really to worry about. In fact, at the high point of trade, 24,900 has been conquered on the Nifty. So good time to get in the F&O perspective. Nigel, 24,900 is conquered. Are the shorts looking like they're jittery?
Well, the shorts will be very, very nervous. Mangalam, talk about the FIs having 94% of their positioning on the short side. I'll tell you what, and they didn't cover in Wednesday's trading session. By the end of today, you'll have to keep a close eye on that mark. Have the shorts got squeezed out on the wrong side? Because just take a look at the intraday recovery. The Nifty, good recovery now, all eyes on the 20-day MA. That's around 50-60 points from current levels. So you'll want the Nifty to get closer to that mark on a closing basis. The Nifty Bank, very, very close to the 100-day MA. You'll want that one as well, to drive home the advantage. And that's really been the leader in the last couple of trading sessions. Options data is extremely exciting. The 24,800 put, the premium has come down drastically out there, telling you there is aggressive writing at those levels. The bulls will want to protect this 24,700 odd mark. That's the first line that you're looking at in terms of a support. But just take a look at it. The Nifty is higher, and I didn't see the premium on the 24,900 call move up too much. So the writers are still hanging in there. They are hopeful that the 20 DMA can get held out, because you've got the direction correct, but the premium hasn't spiked up too much. It's more or less flattish as we speak. Telling you, writers are still holding. They're hoping the 25,000 mark can get protected. The bears will be trying to protect the 25,000 mark. The bulls will be hoping that the 24,700 mark does get protected on the downside. Stocks that we're looking at, I'll tell you what, it's very, very interesting. A lot of stocks can potentially go into the F&O ban. One that's looking like a reasonably strong probability is HFCL, because the open interest as a percentage of MWPL, that was more than 105%. So that should be moving in. The other ones, it's touch and go. Vodafone Idea, Bandhan Bank, as well as SAIL, all of them as we speak, the open interest as a percentage of market-wide position limit is more than 95%. So they could potentially be making it into the F&O ban. I'll keep an eye out on these stocks when we get the file later today. Back to you guys.
Take that point entirely, Nigel. The day 2 of October series, we already have 2 stocks in F&O ban. Possible that day 3 you have as much as 6 stocks in F&O ban as well. So that'll be very interesting. We'll take a short break. On the other side, we'll get you buy today, sell tomorrow calls from our technical experts.
Welcome back. So let's go back to Nagaraj for some final advice and calls. Markets actually perked up, getting into weekend mood perhaps. 53 points higher, so not bad. Almost at 24,900 now, Nagaraj. Final levels to watch on the indices and any final stocks?
Yes. So we right. Nifty is in a strong momentum. It looks like the 850, 900 is going to be broken out sharply on the higher side. I'm expecting Nifty to move towards 50 or 25, 200 levels, which is going to be the initial target for the Nifty. And I'm sticking with the same stocks. Buying for the buying one is the Nelco. It is currently around same price around what we have discussed, 905, 906 levels, and upside target would be 950 and 870 is going to be the initial support. And second one is MMTC, currently trading around 69.70, little bit higher than we discussed, and upside target would be around 75, and 66 is going to be the stop loss.
Are you looking at Kalyan Jewellers right now? Because when we started the show, it was about 3.5% higher. Now it's extended its gain. It is about 6% higher. Do you believe that there is a trade here for a reverse trade on Monday?
You're talking to me?
Kalyan Jewellers. Yes, Nagaraj.
Yeah, Kalyan is looking positive. I think one can look to continue the trades because after the sharp decline, we have seen some good amount of bounce back, and I'm expecting more bounce back to come in the next, at least for the session. 520, 525 is going to be the next hurdle to be watched in the near term.
All right.
Thank you. Thank you very much for joining in. Let's get to a CNBC-TV18 exclusive now, where sources tell us that life insurance companies have cut commission on first premium and renewals. Yash joins in with the details.
Well, just a couple of days ago, we had reported how the general and health insurance companies had decided to cut the commissions which they pay to distributors on sale of insurance policies. This is, of course, to pass on the entire cost which the insurance companies were taking because of the GST changes. Now, what we've been given to understand now is that the life insurance companies have also decided to do the same thing. The quantum is as big as what the general and the health insurance companies decided to cut as far as commissions are concerned. That is, life insurance companies will be cutting commissions to distributors by 18%. This is both on renewal policy premium as well as the first year premium, which is the new policies, and across product lines, term policies, ULIP policies, savings policies, as well as, the annuities. Now, as far as this particular change in terms of cut in commission to distributors is concerned, that will become effective October 1st. Now, which are these distributors? Of course, all of them. Starting with web aggregators, the one listed here is PB Fintech or Policy Bazaar. Then, of course, individual agents, banks, as well as brokers. We've also spoken to a few analysts in terms of what could be the impact of this, cut in commissions of 18% on life insurance companies as well as distributors. For life insurance companies, if you remember, as soon as the GST changes were announced, the companies had intimated that they will have to take extra cost burden, and the impact could be on their EV, of course, in different proportions, VNB as well as margins. Now, with the passing on of this entire cost onto distributors, analysts suggest that the entire negative impact in terms of VNB margin as well as EV would go out. There won't be any impact, and the impact would get neutralized. But on the other hand, for distributors, it could mean a very large impact. We've spoken to analysts in terms of what could be the impact on the listed distributor, that is PB Fintech, and the suggestion is as follows. There could be a negative impact of 15 to 18% on the revenue for PB Fintech, 25 to 30% on the EBITDA, and 30 to 35% on the EPS as far as PB Fintech is concerned. So large impact in terms of the numbers and the impact that this could come through for a company like Policy Bazaar or PB Fintech.
Okay, thank you very much for that. And the other story that we'd like to highlight is that sources suggest that one of India's largest agrochemical companies may be in talks with global beverage and snack major for a long-term supply tie-up. To get to more details about this, Vivek joins in.
Well, that's right. So Indian agrochem major UPL, we understand, is in talks with beverage as well as snack maker global. Remember, it's PepsiCo, and this is for a long-term supply agreement. We understand that PepsiCo is in talks to go ahead and mandate use of UPL's agrochem solutions for global contract farming operations. Along with that, we understand that the deal may extend to use of companies' gel-based technologies for the water technology that the company actually provides. Along with that, we understand that this particular deal that may be announced will be a multi-year contract in favor of UPL. And we understand that one of the key aspects of this particular deal would be the fact that the deal likely to be announced within UPL's chemistry subsidiary, which is called as Superform. We understand that UPL may also be mandated to go ahead and provide a key intermediate as far as Pepsi's largest stimulant is concerned. We reached out to both UPL as well as PepsiCo. We're yet to hear back from them. But it's an important development, and UPL will remain in focus on the back of this particular likely deal.
Thank you very much for that. By the way, lots of stocks are moving around. Pull up a Poonawalla, FinCorp, that's up 5%. Netwear, we've been discussing it. The stock is now up 6.5%. It's spiking up. Kalyan Jewellers, just about half an hour back, was up 4%, now up nearly 5.5%. IFCI, Anantraj. Oil and gas stocks have been doing very well. We spoke about MRPL at 230. Now look at an HPCL. That surge nearly about 3%. But the other big stock on our radar since morning, actually last couple of days, has been Sammaan Capital. And now the news is official. Abu Dhabi-based international holding company IHC is set to acquire a controlling stake of 41.2% stake in the company via a deal valued at 8,850 crore rupees. This triggers an open offer as well. We had a chat with Gagan Banga, MD and CEO of Sammaan Capital, about this acquisition. Listen in to what he had to say as we get into this break.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Welcome back. Some of the stocks that have been moving around for the last few minutes. Let's pull up SML Isuzu. That stock's rallied about 9% from the lows, currently sitting with a gain of almost 5.5%. The other one is Hindware Homes. That's also seen a big surge from the lows. In fact, with volumes picking up as well. Hindware Homes is almost, as much volumes as we see over the last few trading sessions, which has been higher than what we've seen over the last month or so. And Senco Gold, we've seen all the jewelry companies see a spike ever since we got those results coming in from P&G in terms of the quarterly business update. And from then itself, Senco Gold too has rallied about 2%. But not all is gaining. We have on the lower end Tata Investment Corp as well. After seeing a rally of almost 15-16% this week, it's come in for some profit booking at the low point of trade. Remember, in the last month or so, the stocks rallied almost 50%. And the other one is Bazaar Style Retail. At a time when we've seen a big surge in a lot of these retail companies on account of their second quarter update, Bazaar Style Retail as well reported a 70% growth, but that stock is coming for profit booking, down about 5.5%. And the third one is Sun TV, down about 4%. Had seen a rally on Wednesday ahead of reports that maybe Diageo may go ahead and sell Royal Challengers Bengaluru, and that may cause a reset in the IPL ecosystem. So look at the sum of the parts valuation. Sun TV looks attractive, but maybe the streets decided to take some profit after a big 16-17% up move over the last two trading sessions on that counter as well. Good time to get in Amrish Baliga. Amrish, so many stocks moving around. Is there anything particular that you like?
In fact, my pick is Titagarh Rail Systems, which is a market leader with a capacity of about 12,000 wagons, 300 passenger coaches per annum. In passenger coaches, they have EMUs as well as metro coaches, and they command a 25% market share in wagon manufacturing. They have four manufacturing facilities and a very strong order book position, about 13,000 crores, which includes 11,000 wagons, 441 metro coaches for Pune, Mumbai, Bangalore, Ahmedabad, and Surat metros. The company also has two JVs, and there also they have about a 13,000 crore market orders pending, which is BHEL Titagarh Consortium, which has about 80 Vande Bharat sleeper trains order worth about 6,000 crores. RK Forge and Titagarh JV has wheel set orders worth about 7,000 crores. So the expected revenue CAGR over the next 3 years is about 23%. The EPS which I'm expecting for FY27 is about 32. And with this, my target price is about 1120.
All right, 1120 on Titagarh Rail Systems. Is there anything else that you like in particular? I'm looking at Urban Company. The street, if you value it on a PE basis, it may look extremely expensive. But if you look at it from a TAM basis, a total addressable market, not very different from what we'd have in, say, something like a Zomato or Swiggy. But the market cap difference as compared to Urban Company and these others would be a lot more. So would you bet on something like an Urban Company?
Yeah, surely, because you really can't see it from a PE perspective, because Zomato, which is eternal now, if you had valued it from a PE perspective about 2 years back, you would have never bought it. And then you would have missed out on this sort of a rally which we have seen. So Urban Company also, I see, a further move from here. May not be immediately, because we have already seen a very decent sort of a listing gain. But then, I'll not be surprised over the next 6 to 8 months if we see levels of closer to about 230 to 250 for this.
All right, take that point. Thank you so much for joining in, as always, giving us quick fire updates on ideas that you like and perhaps the questions that we had with regard to Urban Company as well. Not wise to look at it from a PE basis, but the total addressable market. With that, we'll start to wind down the day and, in fact, wind down the week as well. It's been a good week if you're a bull, and most on the latter half of this week itself. The Nifty goes home with a gain of almost 1% for the week, 50 points higher for today's trading session. A large part of the gains on account of what the metals pack has been doing and what the Nifty Bank has been doing as well. The Nifty Bank obviously up to 2.5% this week, a supportive RBI policy. In fact, barring the rate cut that wasn't expected, some of the commentary has been fairly positive in terms of growth prospects for all the banks. That's causing the reason why the Nifty Bank is closer to that 55,600 mark. A big move is what we saw on Wednesday, and that continued into Friday's trading session as well. The broader markets, that's where the action was. We saw a big gain on the midcap index on Friday. In fact, through the week itself, the midcap index is higher by almost 2%, which is twice as much as what we've seen for the Nifty. And we're ending the day with nearly 2,000 stocks advancing for about 900 stocks which are declining. The stars of today